A common question I get in my investing courses that I offer is, well, how many stocks should I own? How many individual stocks should I own? So we're going to answer that question coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, do consider subscribing. All right, so I get asked, well, how many stocks should I own in my portfolio? How many individual stocks? I actually created a lesson for one of my courses in that too, in my stock trading course. So I'm going to give you kind of a sneak peek as far as what the lessons look like. So we're going to take a look and answer that question by showing you the lesson, and then I'll wrap up at the end. But let's start by answering that question, and I'm going to show you that lesson. One thing that's often asked, and a real key consideration, is how many individual stocks should I own? How many should I have in my stock portion of my overall portfolio? Your overall portfolio might have some bonds, maybe some cryptocurrency, some cash, whatever. But the stock portion, how many individual stocks should I own? And the reason that's asked is if you have too few in terms of what you own, then you're not diversified in your stock portion or portfolio. If you only have one or two or three, you have a lot more downside risk. You might be investing like these 2 or 3 companies are the greatest in the history of the world, but it doesn't take much to all of a sudden have them be the worst companies in the history of the world. So that's one of the dangers of having too few. But the other part is if you have too many, then you could be over diversified, right? It's hard to track. You've got 40 or 50 stocks. How do you track that? How do you keep on top of what's going on with their strategy and their performance? So it's hard to track that. And there's less potential reward because you're so diverse and trying to manage that than versus something that you want to concentrate on more of your key bets, at least when it comes to individual stocks. So what's a good number? Let me share you some ideas around that. One, traditionally, what has always been the literature for a long time is the traditional number was always 20 to 30 individual stocks. You want to get somewhere in that number range was always the historical norm as far as, what is the answer to that question, 20 to 30. Then there was a study done by Riley and Brown, and they found that portfolios that contain 12 to 18 stocks provide about 90% of the maximum benefit of diversification. So if you say, well, I want to get diversified, I want to own stocks in different industries and different things, you only might need 12 to 18 of them, that are in these different industries, and they can give you a lot of diversification, about 90% of it. And it makes it easier to track too. It also makes it easier to get started too, in terms of trying to buy 20 or 30 stocks. It's easier to start with 12 to 18. So I'm pretty comfortable with either that number or going higher to 20 to 30, by the way. And actually, when you start looking at another way as far as managing your money, a better way maybe to look at is that in terms of diversification and reducing your risk, is a couple other things that have been used out there as well, particularly by more active traders who are trading frequently. And one would be that no individual stock is more than 5% of your total capital invested. So if you think about that, 5% would be 20 stocks, right? Of all this, of your total capital. If you had your total capital invested, 5%, that'd be 20. So for example, if you had $10,000 or rupees or euros or pounds, whatever you have invested, then you're looking at that, 500 per stock, right? So you have these smaller amounts per stock. You could even go smaller than that and say, okay, no holdings can be more than 2% of total capital invested, which gets you to 50, right? Now you got 50 different stocks because you've got, 200 units or $200 or whatever your unit is on a $10,000 investment thing, per stock. Now, if you had $100,000 invested, it'd be $2,000, right? So that's 2%. And this is particularly popular with more active traders where they're making lots of bets and some work out and some don't. And so protecting that downside risk, that 2% has been a real common number for more frequent traders. But 5% is fine too. You just get a little more downside risk. If you're more of a part-time trader or whatever, then getting that 12 to 18 or 20 to 30 is perfectly fine too. So any of these work, it's just a matter of what you're comfortable with as well. But I think that if you're frequently trading, then and especially if you're getting started out, it's better to have more stocks with less money in each as you're learning as well too. Start small. Try to invest in more stocks. Take a look at lessons and thoughts around fractional shares, by the way. So in case you're wondering, well, how do I buy $3,000 worth of stock of Amazon or somebody? You can actually buy a small percentage of that. So take a look around things around fractional shares that brokers are starting to offer more than ever. And we have a lesson on that. Okay, so some final thoughts around that is you still want to, if you're holding 20 to 30 or 2%, whatever you're choosing, you want to diversify by sector and industry. That's the whole idea of getting that diversification, right? So if a sector would be like the big sectors like healthcare or energy or financials, and then industry are like small sectors underneath that, or excuse me, small businesses or industries underneath that larger sector. So we have under healthcare, we have biotechnology, we have medical devices, we have pharmaceutical, and so on, right? So like what energy might be the sector, and oil and gas would be the industry as opposed to wind or something. And then the good thing is to have a variety of both between different types of sectors and industries, right? So you start looking at that industry level. So you might have, let's say, some biotech companies, an electronic vehicle company, a larger technology overall sector type thing, banks, which is an industry of the financial sector. I mean, you have this kind of this mixture going on, and by doing that, you have a variety of types of investments. It helps kind of give you that diversification. Is the big idea around that. If you have 12 stocks and they're all in technology, you're diversified at the stock level, but you're not as diversified at the sector and industry level. So something to consider. Also, you can use ETFs or mutual funds for instant diversification. And maybe you want that to be your core holding, and then you add individual stocks around that. That's a common strategy, one that I've used myself, where I might have the S&P 500 largest U.S. stocks be my core holding, and then I buy individual stocks that I think are going to do well around that. But I might buy and hold that S&P 500 and just let that be at a low-cost ETF, for example, or mutual fund. But then I'm going to buy individual stocks, so I've got that little bit of diversification, and then I have my individual stocks around that. Even with that, the S&P 500 is only the largest stock, so I'm missing out in mid-cap or small cap. So maybe in my individual stocks, I might want to target more small cap or mid-cap, as an example. Or the S&P 500 is very technology heavy, so maybe my individual stocks might want to look more at healthcare or banking or some other industries. You can do it any way you want. It's just that you can use that ETF or mutual fund to help give you diversification as you're building out your individual stock portfolio. And that's the key thing in the end, is to do whatever is comfortable for you, right? So that's the key thing, whatever you're comfortable with and whatever you feel comfortable holding as far as the number of stocks and how you want to trade. In the end, it all is about you, and do what is comfortable for you. But there's some ideas around how many stocks should I own. Well, okay, there you go. The key thing is whatever works well for you. It's a very personal decision, but hopefully that lesson there provided some guidelines around how many stocks you should own. So if you're interested in that, check out the courses. It's all in the description below as far as the different courses, as well as feel free to subscribe to the YouTube channel, to keep continuing your education so you can become a confident and successful investor. With that, I wish you all the best of luck.